Hey, what is going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and in today's video, we're going to be going over 8 mortgage myths. We're going to walk through each of them individually. I'm going to give you my personal opinion on them. If you are new to the channel and you like all things finance, real estate, and investing, consider liking and subscribing. And without further ado, let's get right to it. So the first myth is that you need 20% down to purchase a home. Now, this is absolutely no longer true. Now, you go back 5 years, 10 years, and in order to get access to the best rates and the best pricing, you needed to put at least 20% down. That would allow you to avoid something called mortgage insurance, which at the time was very, very expensive. And so nowadays, the lending landscape has shifted a little bit. A lot of lenders have come out with their own mortgage insurance rates, which means that if you put less than 20% down, even though you still have to deal with the PMI, the private mortgage insurance, those rates have gone down dramatically, making it a little bit more advantageous to put slightly less money down in order to qualify for a home purchase. On a standard conventional loan, nowadays, if you have excellent credit, even if you're putting 5% down, those PMI rates are very, very low in comparison to where they were several years ago. And so the point is that you don't necessarily have to wait until you have saved 20% down in order to get involved in this market. Okay, so myth number 2 is that a pre-qualification letter is the same as a pre-approval. So this is absolutely not true. Pre-qualification is based on verbal information only. So in other words, you call up a lender, you're like, hey, I have good credit, I have no problems qualifying as far as income is concerned, I have X amount of dollars in the bank, so on and so forth. They're like, yeah, okay, sounds good. Based on the information that you verbally provided, I'll be able to issue a pre-approval letter up until this price. But many times they haven't even looked at credit. They're just asking you some general questions, getting an idea of whether or not they believe that you will qualify for a mortgage. All right, myth number 3 is that you can never pay off your mortgage early. So again, this is definitely a myth. It's absolutely not true. As long as you have a loan that has no prepayment penalties. So if you're just looking at your standard government product, VA, FHA, USDA loan, or a conventional mortgage product, check with your lender, obviously, but the majority of those do not have a prepayment penalty. So if you want to send a chunk of money to pay down the principal, you can. If you want to pay extra every single month, you can. Or if you want to just stroke a check and send it over to the lender, pay the whole thing off, you can do that at absolutely any time. All right, myth number 4 is that the down payment covers your closing costs. Now, this is absolutely not true either. The down payment is completely separate from the closing costs. So every time that you're looking at a transaction, you want to decipher between the two. As a general rule of thumb, I think most markets are probably going to be 2 to 3% of the actual purchase price. So let's say you're in a transaction, you're purchasing a home for $500,000 and you're going to put 20% down. In this case, that would be $100,000. So you'll have a loan amount at $400,000 where the value is $500,000, and then you're coming in with that $100,000. Now the closing costs are separate from that. Those include things like lender charges, points if there are any, title and escrow fees, setting up your taxes and insurance. If you choose to have an escrow account, there are ways to get creative with the closing costs where you can potentially have a lender cover a portion or all of them, or maybe you can negotiate some sort of seller credit, but they still have to be accounted for either way. You're probably going to have about 2% in total closing costs, which would be about $10,000. So in that scenario, you'd have your down payment, which is $100,000, plus closing costs, which are about $10,000. Total funds to close would be about $110,000. Okay, myth number 5 is that you have to have perfect credit in order to qualify for a mortgage. Again, this is a myth. It's absolutely not true. Obviously, if you have excellent credit, you can get access to better rates and better terms, but there are products available if you have less than perfect credit. There are several programs, in fact. You have government products like the FHA loan, you have the VA loan, there's USDA loans, and even conventional loan products will go down to about a 620 FICO score. So don't let your credit necessarily deter you from applying for a mortgage if you're ready to get involved in the market and purchase a home. Okay, myth number 6 is that applying for a mortgage will hurt your credit. So this is something that I get asked about all of the time. The truth is that every credit inquiry that you take, generally it will impact your credit score slightly, but it's a very small hit to the credit. And typically, if you are applying for a mortgage and you shop around with a couple different lenders, so long as you're doing that within a 30-day time frame, it's not going to continue to get worse and worse and worse and worse. So generally speaking, it is a very small impact to the score. We're talking a couple of points, and then over time it just falls away. I think the actual credit inquiry ranking, as far as like what that FICO score scoring model actually bases it on, it's only worth about 10% of the overall weighted FICO score. So it is a relatively small impact to your score. All right, myth number 7 is that having debt or student loans is a deal breaker. Again, this isn't true. Now, when you do have debt or when you do have student loans, you have to be able to qualify for the mortgage while you carry that debt. In other words, you have to be able to debt service everything that you're applying for. And so it has to do with something called the debt to income ratio. So typically speaking, lenders will allow up to about a 45% debt to income ratio in total, which means that let's say if you make $10,000 per month in total expenses, your total expenses wouldn't be able to exceed $4,500. In other words, 45% of that $10,000 in income. Now, with that said, student loans can be treated a little bit differently than other liabilities that show up on your credit report. If they are deferred payments, you still have to be able to debt service those at either a 0.5% of the total balance or 1% of the total balance, depending on the investor. All right, and myth number 8 is never get an adjustable rate mortgage. Now, yeah, this is a myth. I don't know. If you ask me, honestly, I'm not a huge advocate for adjustable rate mortgages. I think that the 30-year fixed is the absolute best way to go. I mean, if you can qualify for it and you're comfortable with a higher payment, you could go with like a 15-year fixed mortgage product. But for me personally, I think fixed rate debt is absolutely the way to go. Now, that doesn't mean there isn't a place for these adjustable rate mortgages. You know, if you did like a 7-year adjustable or like a 10-year adjustable rate mortgage and you had a really strong equity position, meaning let's say you had 40%, 50% equity in the home, and you knew that, hey, within a few years, you're probably going to sell that home anyway, then an adjustable rate mortgage might be a good way for you to save some money here in the short term. Now, for me personally, I like to sleep well at night. Knowing that I have something that is going to be adjusting would absolutely drive me crazy. So I'm not a huge advocate for these, but you know, nonetheless, they do have their place. It's one of those things that personal finance is so personal that it just depends on your specific situation. You know, what your income looks like, assets look like, how long you're going to be in the property. You know, it's very specific to that individual person. All right, well, that is going to do it for the 8 mortgage myths and truths. I hope you found some value in this content. If you did, please consider liking, subscribing, and sharing this video, and we will see you on the next video. Thank you again so much for watching.